On May 20th, SpaceX filed its S1 in the SEC. The S1 is the registration document that the company submits when it wants to sell its shares to the public. According to the S1 filing, SpaceX is targeting a valuation of $1.75 trillion and is seeking to raise $75 billion. And this is the single largest IPO in history. It will trade on the Nasdaq exchange under the ticker SPCX, and the date to circle on your calendar is June 12th. But here is the most exciting part and the one that directly benefits you. Buried inside the filing, between page after page after page of dense legal language, there is one paragraph that changes everything for regular investors. And I'm actually going to quote the line that matters most. Any purchase through this platform will be at the same initial public offering price and at the same time as any other purchases in this offering, including purchases by institutions and other large investors. Normally, an IPO like this is reserved for big investors, hedge funds, and even Wall Street insiders. They get the shares at the IPO price. Retail investors, they have to buy it after it opens, after the easy money has already been made, but not this time. In this video, I will show you how to exactly buy shares at SpaceX at the IPO price, the same price institutions pay, and at the same time they buy it. I'm going to walk you through the 5 brokerage platforms that will be selling these shares, and I'll go step by step on each one. And then I'm going to tell you the catch, because there is one, and not everyone is being straight to you about it. My name is Elias, and if you are coming across my video for the first time, make sure you hit that subscribe button and hit that like button. And let's get right into it. SpaceX, at its own request, has asked the underwriters to set aside a chunk of shares, which is 30%, to be sold directly to retail investors through 5 brokerage platforms that you most likely already have an account with. They are Robinhood, SoFi, Fidelity, Schwab, and E-Trade. Each one works a little differently. Let me walk through them one at a time. Number 1 is Robinhood, and it's the most open door out of the 5. Robinhood has a feature called IPO Access built right into the app. There is no minimum account balance. You can literally open an account with just a few $100 and then request shares. So the way it works is you go into IPO Access, you scroll down, and then you find SpaceX and submit a conditional offer to buy. This means you are telling Robinhood, I want to buy this many shares at the IPO price. Now, one thing to note, IPO Access does not work in retirement accounts or custodial accounts, so it has to be a standard individual brokerage account. Number 2 is SoFi. Same idea. SoFi has something that is called IPO investing inside its active invest account. So you just go in, select the SpaceX offering, answer a few suitability questions, and this is just basically to confirm that you understand what you are buying. You submit an invitation of request, and an invitation of request is just that you are putting up a reservation. If you say, put me down for this X amount of shares. Number 3 is Fidelity. Now, Fidelity is a bigger gate. They get access to a lot of IPOs, but they tend to reserve them for their better customers. So to be eligible, you either need $100,000 or $500,000 in household assets at Fidelity. And the exact threshold kind of varies from deal to deal. But it's either that or you need to be a premium or a private client customer. If you are not any of that, then this isn't your door. Number 4 is Schwab. This too also has an IPO portal where eligible clients can place an IPO order. And unlike Fidelity, Schwab generally gets access behind a household relationship. It's an asset minimum or an active trading account history. So if you're a Schwab client, you log in, check the IPO section and see whether SpaceX shows up.
Finally, number 5, E-Trade, which is now technically E-Trade for Morgan Stanley. Morgan Stanley were the underwriters on this deal. So to participate there, you open and fund a qualified E-Trade account. so that they can confirm that you are eligible. But here's the thing about E-Trade that you need to know. Morgan Stanley Bank and its ultra-wealthy clients get first priority on that allocation. The retail shares that flows down to regular E-Trade customers are kind of what's left after the big clients has been taken care of. So there are 5 doors: Robinhood and SoFi, wide open, no minimums. And then Fidelity, Schwab's, and E-Trade, they are also open, but they are slightly gated. But before you go on raising to open these accounts, you need to hear the catch, and here it is. Requesting shares is not the same as getting shares. That conditional offer to buy on Robinhood, that indication of interest on SoFi, those are not orders, those are not guarantees. They are you raising your hand and saying, I would like some please. Either you get any or how many you get is actually decided after the pricing on June 11th. Here's kind of the mass problem. This is one of the most anticipated IPOs of all time. Demand is going to be astronomical. Even with 30% set aside for retail, there is not enough stock to go around. It's not even close. So what happens? You might ask for 100 shares and get 5. You might ask for 100 and get 0. I'm not trying to be pessimistic here. This is just how an oversubscribed IPO usually works. So the bigger your pockets with these brokers, the better your odds. And in that sense, it is the same old game, but just with a side door cracked open. So what if you don't get an allocation? What if you strike out completely? Well, you can still buy SPCX the moment it starts trading on June 12th. On that day, anyone with a brokerage account can buy it on the open market, just like any other stocks. And this is the whole point, because you'll be buying at the market price. So if SpaceX price is at say $40 and the stock opens at $60, you'll be the one buying the pop instead of getting it. And maybe it goes higher still, or maybe it falls by 50%. That's the difference between getting an allocation and not. The allocation is the edge. The open market is the consolation price. Now, if you don't get an allocation, don't chase the thing, because IPOs usually goes through a discovery period in the first couple of months or even couple of years. Most of them fall by 50% from peak to trough in the first year. So this thing being valued at $1.75 trillion at day one is not going to 10x at least anytime soon. It's definitely going to rise, fall during the discovery period, which can be around the first few months. So if you miss it, you can wait for a few months to where you feel it's comfortable enough for you to buy, especially for the long term. If you enjoyed this video, and probably this video has been of any help, then please make sure you hit the subscribe button, hit that like button, and turn on your notification bell so you'll be notified when I drop my next video.